Yo, what's going on, guys? It's your boy Wolf back with another Fibonacci video. This is part two. If you haven't seen the first video, definitely go check it out, because on this video we're going to be talking about an actual strategy that people can actually apply. So yeah, I just want to say hey to everybody. Welcome back. I've been kind of sick and I'm getting over it as of now, so I just felt I'm a lot more comfortable to put out another video. But yeah, in this video, like I said, this is going to be more so for experienced traders who have an idea or concept of how the market moves. These are basic fundamental things that you got to know. So if you haven't seen any of my videos, everything that you need is in my videos, and I'm going to be kind of describing them throughout this video. Again, this is a strategy video, so they all work together. So I don't want to lose anybody, but if you're confused on certain things, I'm going to briefly talk about it. But to get a thorough understanding for beginner levels, definitely go check out the videos. Okay, so the Fibonacci video from the last one got a lot of views. That was kind of unexpected, but I much appreciate it. So I want to welcome all the newcomers as well. Yeah, so definitely for anybody that's checking out this video or for returning, like I said, thank you for stopping by, and definitely subscribing. So with that being said, actually give a like and subscribe. I'm still trying to grow. We're close to 50, as if you can see at the bottom left. We are 49, but let's hit that 50 right quick. 50 subscribe. So comment down below what you guys think of this strategy. It's not obviously for everybody, but it's definitely something you can try to implement, and I get into that in a little bit more detail. It's not for everybody, but it's a very aggressive strategy. I want to put that out there right now. It is a very aggressive strategy. So with this strategy, I have to let you know, obviously this is a Fibonacci strategy, so you got to know fibs. And so a basic recap on fibs is to me basically just a retracement. That's it. It is a retracement. The Fibonacci is a specific level, number level, 61.8. At the end of the day, Fibonacci is just in reference to a retracement. Price can't continue to keep going up. It has to retrace back down at some point. Vice versa, price has, if it's in a downtrend and going down, price has to retrace. We understand that. Okay, so let me just draw up something really quick. Excuse me. So recap. Price is going up. Retracement periods. Price is going up. Retracement. Certain areas or it's a key level is at a Fibonacci level. Let's just say Fibonacci level over here, right? When price retraces, sometimes it comes to the Fibonacci level, which is exactly 61.8, or it can go lower, or it could come down just a bit and then continue to skyrocket. We need to be on the same page and understand that Fibonacci, when I refer to that, is just an area of retracement. Now, with that being said, for this particular strategy, you're going to need a couple things besides the knowledge of Fibonacci, right? You're going to need some indicators. Now, I'm going to bring out an indicator. This is called the EMA. For those who are experienced, you've come across it before. There's the EMA, and I need to do a video on EMAs. But EMA stands for exponential moving average, right? So what you're going to do is go to your indicators. You're going to type in EMA. What you can see right here is the moving average exponentially. For this one particularly, we're going to keep it very, very basic. I haven't made a video on EMAs yet, but what you're going to do is just follow what I'm doing on the screen. You're going to go to the EMAs, and for this example, I want to exaggerate a little bit. So this is I'm going to make it red, I'm going to make it bold. This is important. Okay, so you're going to set the number to 11. Okay, for the beginners, just follow 11 specifically. If you don't know what the EMA is, it's just a moving average visually on the screen based off of what price is doing. So let's just say, or in this case, since I'm using 11 specifically, for the last 11 candles, let's just say, I don't know, I'm gonna just ballpark it from here to, I don't know, here. This red line is just picking up the average of all 11 candles and just printing that visually. That's all it is. All right, you can change that to 200. 200 is a very familiar one. Let me change this real quick, but that's the general gist. So everyone who knows what the EMA is already, you understand what this is. I'm using the 11 EMA on this specific strategy. Okay, so you need the EMA, you need your sessions, but I do want to demonstrate the strategy in general, but the sessions is going to come into play. All right, so and this is more recent prices. As you can see, the price is counting down right now. So what I'm gonna do is this red part right here is basically Asian session. So I do trade Asian session, sometimes London. I've traded all. So Asian session is right here in the red, London is in yellow, and the white right here is in New York. And they're confined. Like, it's not the whole session, it's just particular periods. The Asian session right here is, I think, like 2 hours between 9 and 11. London is from like 3 to 6. I don't trade that much, but I just need to know when it starts. Excuse me. And New York, I have it from 7:30 to 11. Okay, so we're just going to focus on even recently, like yesterday. So you need the EMAs. Set it to 11. You got 11. That's the settings. 11 EMA. Okay, you got your sessions. So when you typically want to trade, but I want to show you the example of what we're looking for. All right, now let me go to this, the actual Fibonacci, the retracement tool that you're gonna have. Let me just draw, etc. I have this by default, or I set it here, but we're gonna go back to the original what you're given. This is for the beginners, right? So you want to go to your settings. This is the default. It's a lot of things we don't need, at least for the strategy. We are going to, let's see if I remember the settings by heart. Okay, the fib level is right here. Okay, we're just gonna look at it visually right now. So if you use to pull out the fib, we understand that, say if price is going down, you grab it from the top to the bottom. If price is bearish, okay, and if price, let's just say from down here, price comes down, comes to the Fibonacci level, and then continues. Now, this is the standard way. This is as I taught it, and this is like what we see all the time. It doesn't mean you can't adjust this. You can't adjust like the actual numbers. Now, with this strategy, you're going to need, I believe, 70. Let me see, 70. Okay, we're actually going to completely disregard the 61.8. You can edit these however you want to. Actually, let me go ahead and just go to my default, because I don't even feel like going through this right now. So I'm going to go to this route. I just named it 2.0. Let me go to, this is what you want to copy. So you have the only things you're going to make a change, this green one right here is going to be 0.4. Okay, so it's basically 40% of the move, which is right here from top to bottom. Actually, let me draw this out. Say your price is swing high, swing low, and it's retracing. Fibonacci is typically around this area a little bit, but I'm just going to show you some examples, right? Just a visual. Okay, so back into the settings. I want you to type in 0.4, which is basically 40%. The price came down, it came up 40%. That's just all that means. You're gonna have this at 91 specifically, and you're gonna have at 70. Okay, orange 70, which is right here, 91, which is red, and of course 00. All right. So the concept of this, and I do want to give a shout out. I want to give a shout out to WxlfTrades, because I actually learned this from him, but I tweaked it a little bit. So that, like I said, this is a very aggressive a way of trading Fibonacci. And you'll see why. You'll see why. So this is the idea. Price doesn't always, as we understand, price doesn't always, let's say this is a swing high. Okay, price comes down, right? It breaks structure, hypothetically, right? Typically, let's just say this is the typical scenario where we're expecting price to come down from a 61. Let me put this up here, because I have the original. All right, so on the left side is the 2.0. The right side is just a very, very standard. This yellow line right here is the golden zone, which is the 61.8, which is the actual Fibonacci zone, to where typically we see this price retraces or reverses from. Okay, now if I was to put this over in the same places as far as if price was to retrace, this is what you see. Price is not always going to come to the 61.8, the Fibonacci golden zone level. We just established that. Price could come to 50% and then continue its price or its trend. I think way down here, I think is even like 38% or something like that, whatever. Price could come deep into the retracement and can even go completely back to this original point, swing high, or in this case, the swing high, come down, come all the way up here to then continue. So there's a lot of areas where price could retrace to. It's not always the fib level. Now that we understand that, now for this strategy, I just deleted the original. We understand that this is 70. Okay, this is 70%. I'm sorry, y'all. So I'm gonna just put this here, 70% level. All right, we got 91, which means simply that price came up 91%, retrace 91% way up here, and price right here, I think, what did I have? I think it was 40. Okay. I just wanted to put this here so people who are more analytical, whatever, this is what it looks like. You understand what these zones are. Anyways, what you're trying to do is when prices come down, and this is never guaranteed, but it's just an opportunity. Again, I learned this strategy from Doyle Exchange. Shout out to him. When price, we understand this is the area of the Fibonacci. Price can retrace deeper. The idea is this is going to be your stop. Your entry. Okay. Yeah. So if we're shorting, say price came down, it shot up. It went past the fib zone. Let's just say it's right here, right? We set our order to be in the 70% retracement zone right here. You're going to put your entry, your take profit at the 40 or the green line, and you're going to put your stop loss at the swing high. Like I said, very aggressive, very aggressive. And so the idea is once you notice that there was a breaker structure, and let's say this was the high, price came all the way down as low as down here. Once you start to retrace, you're going to set a limit order automatically. This is not a getting in aggressive or manually. You're going to set an order at these zones specifically. So if or when price does come up here, okay, it could come up here, tag you in. The idea is when it tags you in, it comes back down, and boom, there's your 1-to-1. That's the idea. Okay, you're risking $100 to make 100, 1,000 to make 1,000. That's the idea. Okay, we're not going to necessarily at least in this video, talk about like going from 1 to 2s or etc. Because you could very well hold this, but price is never guaranteed to come back all the way down here. Price could come right here and then reverse to the upside. This is just simply trying to get a 1-to-1 really quick. And it's not guaranteed for price to come and tap you in. You could just stop at the 61.8. Remember that. Now, that's why I have a couple rules I'm going to set for this. This is the general idea. Now, what is this red line? This is where I tweaked it a little bit. Okay. If price, and this is something I kind of noticed, doesn't happen all the time, and there's rules that are set with this. Let's say price comes up here, it comes back down, you just got your 1-to-1, cool. But let's just say, for instance, like you were still in this trade, let's just say price comes all the way up here, very close to that stop loss. Again, this is aggressive. Your take profit is still going to be the same exact area, but if your entry is up here, this turns this trade or this particular entry into a 1-to-6 ratio. Okay, and keep that in mind. So I want to explain this. Actually, I'll do that a little later. So in this particular case, this is if price continues to come up past the 70 level. Now at this point, you're going to have two entries. Basically, you're going to have two orders pending. One for right here when price comes up and comes back down for the 1-to-1 right here. If that happens first, you're out, you're canceling the second order. Keep this in mind. Let's just say if price from here, I'm sorry, hold on. So price comes from down here, it starts to retrace, it comes past the 61.8, it still continues, it taps you in on the 70%, and it still continues, it taps you in up here. So now you're in two positions, but one of them is a 1-to-6, one of them is a 1-to-1. Now you're in two positions at this point, right? So this is what it would look like if I can grab, right? There we go. Cool. So this is what it looks like. Same take profit, same stop loss. This is based, I already did the math, and I'll describe a little later. This is a this will turn into a 1 to 2.1, I believe, 1 to 2.1 strategy, basically, risk to reward. And this is, you're just simply setting this. You're setting this. You're not getting it manually. You kind of like set and forgetting. You're still managing on watching what would happen. But this is the general idea, okay? So let me go ahead and delete all this, and we'll go to some live examples. The EMAs is important, so let me get into this. The EMAs. Now, let me just, okay, this is live. So let me go even like just to show you guys what we're looking for. You are trying to find a very momentum candle like this, okay, like this. This is okay, but you know, we prefer to try to find momentum candles like this, bullish, engulfing, etc. There's a couple ways to do this, but I want to show you the example, right? When price breaks and closes above this EMA, this is why I put it in red and put it in bold. This is important. It's key. You want to get your Fibonacci. Actually, let me back up a little bit, because at the end of the day, we got to understand market structure at the end of the day, and you should know that by now already. As you see here, there are key points. We understand that prices continually going up until it doesn't. Okay, which is actually around over here, and I'm just going to keep these. We're just going to keep these in mind. Okay, these are swing highs, swing lows. All right, we're going with the trend. With the trend. Remember that. And let me put these EMAs back on. All right. So, for example, this is a very hefty candle. This is what we're looking for. This is our signal. Once you see that price is going up, right? This looks like a retracement on a bigger scale, but there was a structure broke right here and right here. What does that mean? Once price started to go up, we are trying to buy. This is your signal candle. Once it closes and it breaks structures, that's even better. All you're gonna do is pull that Fibonacci on that same candle. This is the 5-minute time frame, and 5-minute time frame only. Backtest other time frames. Let me know the results. So as you can see, this is the original. This is the original Fibonacci, but we're gonna put that to the 2.0. All right. In fact, let me do a little replay real quick. At at this zone and what happens. So, boom, price shoots up. It breaks above this 11 EMA. Breaks up, closes, and then you're automatically going to set your entries or orders at the appropriate places. Stop loss is at the bottom of that whole move. The entry is going to be at the 70 level, and your exit is going to be a 1-to-1. This is not going to be perfect every time. It's on a 5-minute time frame, and I'm trading a futures chart. Now you set one order, boom, it's ready. And this is going on when it's live. So the whole point is you have time to set this, but you got to be active. You got to be ready to execute. And on the second order, you're automatically going to put an order right here. So at this point, this is what you should have. The Fibonacci from the bottom to the top. Since price broke up, we're just trying to win on that retracement. We're going to set two orders, just pending. One is at the orange, and one is even lower. They have the same stop loss, same take profit. Now, I'm going to show you. In fact, let me go in smaller time frame, this area, okay? We're going to go to the 1-minute time frame and see exactly what's going on. All right, and let's just say, for this example, I'm risking I'm risking $1,000. Very quick, aggressive scalps. All right. I'm not risking 1,000 on here, but I'll go into detail about why. But right here, I'm risking 1,000 to make 1,000. That's the idea, 1-to-1. All right, let it play out. Prices start. Okay, price is starting to retrace. It's on a 1 minute time frame. You already set your orders. Price comes down. All right. So let me scoot these over. Boom. Now you're entered. You're actually into this trade right now. I'm risking 1,000 to make 1,000 because this is what's going on a bigger time frame. Price came down, as you can see, to the T. Price came down on this red line. All right. So you are in two positions at this point. Okay. So, and immediately price came down, tapped into here, and then shot straight up in 1 minute. So basically 2 minutes from the first entry. This is 1 minute and this is 1 minute. Price came down and shot up. So since you're in two positions, let's try to kind of like equate this. When you actually get into this order, if you are trading, I can't really do this on replay mode, but I'll go back to it. Anyways, this is the idea. Okay, we're not necessarily trying to go for 1 to 2 or 2 to 1 to 3 or 4. At least not right now. You could back test that on your own. We're just trying to be in and out. This is what it looks like on a bigger time frame. So the rules is you gotta have and look for a break. Well, you got to be going with the trend, of course. That's with any strategy. Go with the trend. Once price breaks up above this EMA, this 11 EMA, or in this particular case, you're just automatically going to set 2 orders of the same amount. Since we're trading, this is a mini, or you could do micros, whatever. So we trade contracts. The lowest you can trade is just 1 contract. Let's say if I put one contract in here. On the second order, I'm using 1 contract as well. I'm not adding like 5 contracts because it's lower. No, I'm doing the same amount. 1 contract here and 1 contract here, but I got a different entry down here. Okay, keep it the same. That's the rules. There has to be a breakout with momentum. You set 2 orders of the same contract, same amount. Okay, the stop loss and the take profits are the exact same. Now, the rules: if price comes down here, it shoots up. Let me go back to the 1 minute time frame. For instance, if price was to come down, as we see, that's what happened, and it taps you in. And let's say from this point, it just taps you in the same candle, in the same 1 minute candle, and shoots up to your take profit, which is right here. That 1-to-1, you're up 1,000. Boom. As soon as that happens, before, like for instance, in this case, price came down first, and then went to the original take profit. But if price shoots down in the same candle and shoots up, then you're going to delete. You're going to delete the second order. You have to be on. You have to be on par with this. You really have to. Okay, so that's the idea. Let me go back. That's the rules. Pay attention and go down to the 1 minute time frame and do exactly what you just saw me do right there. If price is not going ahead, go ahead and immediately tap you into your next into your take profit. That's what your second one is there for. This is a probability thing, and I'll show you examples of what I mean. So let's see. So 1 to 1,000. Okay, cool. So that's the strategy. Now let's go back. Okay. All right, so that's just an example. Now that's one rule for this strategy. Let's say, for instance, now we're going with the trend. Let's say this moment you missed this one, right? Well, let's say if you missed it or not. We're at the end of the day, you're just trying to make your money and get out. You're not supposed to be taking more than 2 or 3 trades, like for real. So if you got into this trade, you would have been up 1,000. You're done, or actually more than 1,000 because it hit the second entry as well. Let's just say if you missed that, okay? The rules: momentum candles. All right, we can visually see the momentum candles. I will consider this as well, but I just want to point out the obvious right now. and different examples. So this is the next candle that shot up. Okay, continuation. If you guys don't really understand a continuation, so after on a downtrend, okay, this was a little downtrend. It was a retracement. Once price broke up here and broke some structures, it seemed like we're going to start continue. That retracement period is over. Once prices start to be above the EMAs, right, it'll come back, it'll test the EMAs, come up, come back down. I will be looking for a continuation off of the EMAs. So in this case, I'm looking for price to break down. It happened here too. Price broke under and then broke back up with momentum. You see this, the difference? Right? It stayed above the EMA. On this candle, price broke below, but the second one broke up and it was with momentum. That is a continuation. That's what you're looking for. And just hypothetically, you know, like if you just came to the chart and you missed this trade, right? So that's hypothetical. So you came right here. This is a continuation in the same direction. Again, still following market structure, right? Because right here in this candle alone, it broke the 11 EMA and it broke the 11 EMA and it broke structure. I would set exactly the same things. Now, obviously right here, price never came back down here. This is the second rule. If price does not come back down to either your entries within 5 candles, cancel both orders. Okay. Within 5 candles. And again, back test this, see whatever you like, tweak the numbers, do whatever you got to do. But this is the general rule. So we had price break out right here. Once we saw that, we're going to draw a Fibonacci. We're going to set our orders, and we got 1, 2, 3, 4, 5 candles. Price never came into our entry, so we delete this. On to the next. It's as simple as that. Now, as you see, momentum candle that broke to the downside. This is a major candle because it engulfed, well, this whole, on a bigger time frame, this engulfed all of this. There's a breaker structure from this the seller's candle right here. And so, same concept, but to the downside. That's your signal. Draw your Fibonacci from the top to the bottom. We understand on a small time frame that that's where price swing high, swing low of this whole leg right here, or this candle. Once this happens on this candle, we are looking to set our orders. As you can see, it already hit the entry and exit in the same trade. So let's go down to it and see if, actually I already know, I could tell with that candle. So let's go back to it. I kind of lost it. Let me see. All right, right here. So in the 1 minute time frame, down to the details, this is what happened. All right, you set your order. I'm sorry, let me turn these off. You want price to come back up to this area. You want to set your orders regardless. You're gonna have 2 of them in this case, one at the red line, one at the orange line. Let's play this through. All right, price came up right here, and let's see what happens. Next candle shot straight down. So at this point, this again, this is 1,000, 1,000, for 1,000. These are 1-to-1s, and in one candle it shot up to your entry. The next candle is shot straight down to your exit. Once this happened, I'm deleting this. Okay, this literally could be the end of your session. This is ironically, well, this is in the beginning of the New York session. I'm sorry, Asian session, at least the one that I trade. So I'm already up. I'm already out of my position. That's all it would really take. Like I said, this is a very aggressive strategy, but you have to back test this. This happened multiple times. All right, so that one won. Let's try to speed through this and show multiple examples. Okay. All right, let me head back. So, because I want to show like losers and continuations, etc. So I'm just going to kind of speed through this from top to bottom. I'm gonna just mark out right here. Right here, you have time to set this. This one won. We just had to, let's just say, I'm gonna just use a big number because we like big numbers. So 1,000, 4,000, you won. Boom. All right, now let's talk about that continuation again. Look at the EMAs. There's a breaker structure right here, and it broke under. Price came back up. It started, you see price came back up, but this right here is a huge wick, and of course we're in this trade at this point, so we're not really looking for any other trade. We're out of this trade, in and out of this trade within the 10 minutes basically. So when price broke back below, giving a momentum candle, and it broke structure right here, you know what that means, right? And so based off the rules that we set, if it doesn't tag you in 5 candles, just cancel the order. This is a continuation of the EMAs breaking back down. We're following market structure. This is a momentum candle. This, and it broke structure right here. Okay, this is like how it looks, right? Price from here down here came up, and now it broke. That first candle that broke, we drawn the Fibonacci out, and then we're going to set out our orders. It needs to tap into our entries within 5 candles. If it doesn't, cancel it. As you can see, 1 to 1 right here. We got 1, 2, 3, 4, 5. Okay, this is the 5th candle, right? 1 to 1. That's 1,000 right here. You missed this one. There's one right here. We can visually see it. Okay, because price came up enough, it closed above the EMA and then shot down with a lot of momentum, engulfing the previous one. So I'm just going to go through this. This one right here, as you can see, the smaller the candles get, you can't really get a good, especially on futures, you can't get like a pinpoint, but that's okay. I mean, you shouldn't be taking that many trades, as is. So as long as you visually, as you can see right here, this is a 1 to, okay, this is not a 1 to 1 specifically, but you can make it a 1 to 1. Still, price came up, retraced, tapped you in, and it technically tapped in up here as well. And this is why I put it the Fibonacci zone exactly at 91%. So it tapped into two entries, which this would equate to approximately this amount, because you're in one. And so this right here, you're up 1,000, and this right here, because you're using the same contract, it'll be smaller. Your risk would be smaller, and then price will continue to go down. And I think this would be like a 1 to like 1.5, yeah, 1.5 ish, as far as the amount, like the dollar amount. So this one be basically, well, this is the total. You got 1,000 from here, and you're in that trade. It taps you into here, and this trade alone, we're using the same contract size. By the time we get down here, it's about 1,500. So you got 1,000 from this first trade, and you got 1,500 from this trade. Combined, it's approximately around that amount. Again, this is a 1 to like 2. It ranges between 1 to 2.1 to 1 to 2.5 with this strategy. You're in, you're out. That's it. Okay. This one right here is very shy. You see the difference between when price, or I'm sorry, this candle right here broke up and above, and then shot back down right here when it did. We're following structure, breaker structure right here. Okay. Price came up a little bit, shot down. That's kind of close, kind of close. All right, price broke up. Now, obviously, what does that mean? It's a momentum candle, huge momentum candle to the upside. It broke a lot of structures right here. We obviously see that didn't work because it would just simply, price didn't retrace down. It's okay. It's not the end of the day. It's not the end of the day. So move on to the next. Price stayed above the 13 MA. It came down, shot up. That's your cue. From top to bottom, price did not 1, 2, 3, 4, 5. Price did not come back down here to your entries, right? That orange line. So you cancel that order. Okay. And this is how you kind of keep yourself safe. This is the rules, and you should tweak it how you want to, but this is what I kind of found. Okay. Now we're kind of like out of session. So if you took this right here, this is what you're up, right? 35, 45, 4,500 if you took these trades alone. Okay, if you lose, it's not going to be that much. Again, these are one-on-ones. You're just trying to, you're trying to go for a specific goal at the end of the day. A monetary, typically it's monetary. And this is just examples of this type of Fibonacci like tweak, basically. So yeah, I think that's what I got. So I want you guys to definitely back test, and this is more recent price action. Like that was last Asian session, like yesterday. So yeah, let me know what you guys think about the strategy. Definitely back test it and get back at me, like for real. I want to see what you guys' opinion is on here. I use this not all the time. I have different strategies for different things, but this is kind of what I saw enough to even show you guys. So let me know what you guys think about the strategy, and until next time, I'll catch you. Peace.